Hey everybody, this is Bo Yoder speaking. I come from a family of teachers, and teaching has always been one of the great passions of my life, whether it be talking about the markets and trading or other sorts of things that make your life better, enhanced in some way that's either useful or fun. For me, the way that I learn most effectively and I find works the best for getting what's in my head into somebody else's is kind of a hybrid approach of theory and application. So I try to kind of keep these little video tutorials that we do here at 3D Apex Trading kind of balanced in that way. So we've had a fair amount of theory recently because most of the questions that we've been getting have been more structural. What is this concept of trading as a liquidity provider? How does it work? And that's the reason why I created the 3-video LPT formula training, which many of you have probably already seen. If you haven't, just direct your browser to 3dapextrading.info/lpt-access.html. And I'll go ahead and throw that link on the screen there so you can pause this video and write it down if you choose. Okay, so what I wanted to do here, I just opened my trading charts up this morning to see what the markets were doing, and I'm looking at the US dollar versus the Japanese yen, and I see a potential trading opportunity and a real good teaching moment in order to walk you through the 5 steps of the LPT formula, or the liquidity provider trading formula. Okay, so as you know, the first step in the formula is to find something that somebody's going to want to buy. And as luck would have it, this trade is a long opportunity, so they will be wanting to buy stuff from us. If I open up the 27-minute chart, which is my confirmation chart over here, you can see that the market has, and let me squish this down a little bit, the market's been kind of trading in a range for some period of time. It's come back into an area of historic chart support, you can see right there, from this previous high and these previous lows. A little bit of a chaos move there that kind of makes an anomaly in the chart, but if you really see where the quiet, solid, steady action is, it's right in that zone. And if I go and draw a horizontal line, just kind of going right through that mess there, and we go back in time, you can see that that's also been an important level here and here and here. So for whatever reason, again, we don't care about fundamentally why that exists. We just know that that's an area where the liquidity pools have been in the past. So now we see that the market is coming down and it's testing that level of support. All right. Lots of power to the downside. This is our, for those who have not been introduced, this is a proprietary indicator which we call our power indicator, part of the 3D Apex trading methodology. And very intuitively and simply, it shows you power in the market. So here we can see the market reversed its polarity. Polarity at neutral is this middle line. Went lower, and this last push down was on pretty significant power. But now you can see as we go forward in time, it's pushed back down to those lows for a third test with very, very little power. And then the next move is this giant bullish engulfing bar. Okay, so this market really looks like it's turning itself over. Now, here comes the interesting part and why trading as a liquidity provider is so powerful. Do we think that this is an important bottom and that the market's going to come flying back up to the highs and continue on higher? Check this out. There is a massive liquidity pool lurking just above, right in the area here between the, here, let me go ahead and draw it out in the box so that it's super explicit. From these former support levels, which are now acting as resistance, up to that 50-period moving average, which is the orange line on my chart. So we've got power pushing to the upside for the first time, and I think it's extremely likely that the market's going to push up to that level, and then whatever it'll do, it'll do. Okay, so let's follow through the 5-step LPT formula. Step 1, find a market that somebody else is going to want to buy in the future, and I think they're going to want to buy it up to that point. Step 2, buy it cheaply, and that's what we're going to get into next. Step 3, go figure out where those people are going to want to buy it from you, and then sell it to them, and then repeat. Right? Those are the 5 steps. So we got step 1. We got an area of liquidity that the market is likely to be drawn towards. Now, again, I don't think this is a strong trend continuation, and actually, hopefully, we'll get some good examples in the real time, in the real world, about whether there is power there or not. That's the cool thing about the 3D Apex trading methodologies. It'll tell you whether a trade is worth hanging on to or scalping out of. But for now, we've got a change in polarity and power over on our third chart here in our 3D Apex lens, the confirmation chart. Our setup chart has a big, beautiful bulge in power, and it's broken above its moving average. It's kind of pulling back a little bit. There are a bunch of different levels of support. Let's just squish those down real quick. So draw those out more explicitly. We've got support here, just flying through this real quick because these levels are not, this is a pretty small chart. There's only 3 pips from here to here, so these levels are going to be fairly mushy, I would say. So you see a lot there. And of course, there's a lot of support down at the lows of the range. Let me just go ahead and move this line down to denote that level. Actually, let's just use the extreme here. So what I'm looking for, I've got plenty of power pushing higher, which confirms my bias from looking at the liquidity pools that are available to trade against over here on the 27-minute chart. That tells me that this market is going to push higher, or that there's a very high likelihood that it'll push higher. There are no absolutes in the market. There are only odds. Okay, so clarity on that. So what's the next step in the LPT formula? Find a way to buy that inventory that you think people are going to be wanting in the future. We've basically defined our customer base we're going to be servicing. Now we got to buy it cheaply. So I'm going to use the support levels that I've drawn out over here on the 9-minute. I'm going to go down to the 3-minute chart. So now think about this as if these were cycles of money, or more importantly, the currents in the flow of money. We've got lots of flow to the upside, beginnings of solid flow to the upside here. So if this market comes back down to support, it's likely that there's going to be some pretty solid buying, which is going to turn it higher. Okay, so you follow me so far? So now I'm actually going to go over and on the 3-minute chart, I'm looking for negative power. I want to see that market go counter-cyclical. So if you've ever gone whitewater rafting, I'm sure you've experienced the power and the energy of the water as it flows between the rocks or over a rock. And basically that's what you're seeing here. It's concentrated. There's energy and power, and it's fast and vibrant. Then beyond the rock, all that energy is sort of used up, and there are these little quiet eddies. So you have these violent, fast movements as you go over the rapids, and then it's very quiet and very lazy and slow in the eddy beyond the big rock. And that's what we're trying to find here. So on this 3-minute chart, it's coming back down here. I'm actually going to go ahead and set up my orders. I want to talk my way out of this trade. Okay, so now I'm an aggressive trader. I like to trade here's an interesting little dichotomy. I like to trade aggressively by trading passively. So what does that mean? Well, I've set up an area of operations where I'm going to be basically bidding into the market throughout this entire liquidity zone, this entire area where I believe support will manifest itself. Now, there are really 2 ways to approach the market as a liquidity provider. You can go with an anticipatory model, which doesn't get much confirmation and is a little more uncomfortable to some in terms of ego. Or you can essentially pay the market a slight premium for confirmation by using candlesticks to filter. Now, we like to teach the candlestick methodology first because it's harder to make mistakes, and you tend to see it's a more conservative approach. You get fewer trades, but they tend to be winners. It's a great way to get people profitable when they're first coming out of the gate and they've not experienced this style of trading before. But I'm a little more aggressive, and I'm more clued into managing trades in the middle of the trade using the tools of the 3D Apex trading methodology. So I'm just out there soaking up liquidity. I'm also trading a little bit more size, so it's sometimes hard for me to get fills, right? So I can't just always push the button and get fills the way I might like to in certain markets. So I trade passively. I'm putting out orders all the way down from 17 to 9. And if the market breaks below this level, that would show me that my key support levels have failed, and I would take the loss at that point. I've used the position sizing algorithm. We talked about it in another video in order to set this up. So this is about a 2% risk on my total account size, which is about $4,000 at this point. I got a $200,000 account I'm working today for you to see. And you can see now, if I bring my thing over here, you can see that I got filled at 17, 16s, 15s, 14s, 13s, all the way down to 9. And those orders are passively sitting there in the market. So the longer that the market spends working back and forth within this zone, the more size I'll be able to get. So at this point, I'm seeing lots of good power here on the 9-minute. I would be less inclined to take a small profit. There may be a bigger profit available here. Again, my target's sort of in this area around in the 30s. And again, I'm not going to dictate to the market what I want it to do. I'm listening to what it's telling me is happening. So it's like the surfer. The surfer wants good waves, but he can't make a wave show up at will. He's got to sit back and wait for that perfect wave to get to him or her. And sometimes, you pick the wrong wave. Well, what if you're out on the ocean, you had a machine that objectively told you that a huge wave was coming? You could pass up a couple of waves that were looking good on the surface for that monster wave that's coming, a minute later. That's what 3D Apex offers to you, and that's why it's so powerful and valuable. So I'm going to go ahead and just let this trade unfold. We've been talking here for about 10 minutes. I don't want to keep you in real time, so let's just pause this. And the next time that I take an action, I will open my screen up here and we'll talk about it. So for now, I am passively building an inventory in this area where I've defined that the price is cheap, and hopefully we'll be able to get some nice size and then mark it up and sell it into the liquidity zone that we've also objectively identified above. All right, so we'll pause this and I'll be right back. All right, welcome back. It's about 40 minutes later. Let me just go ahead and extend my little area of operations since a lot more bars have formed here. So what has happened here? Well, the market's moved down in my area of operations. I got filled on 3 different levels. I got filled at 17s, 16s, 15s. Let's see, did I get filled on 14s? Yeah, I guess I did. Cool. So I got 4 different levels. My price average on this whole thing is 102.16. So you can see I just put a little line there. So I'm currently profitable on the trade. But look at what's happened. Now, first off, it's been about 40 minutes. I have had no stress, no worries about this trade. I went over, I made breakfast. I was cranking out Led Zeppelin, did a reunion, oh gosh, I think last year perhaps. And they did a great recording, so it's a banging album, enjoying that. So no stress, no worries. But now I'm coming back to this trade, and I'm taking a look at my confirmation here. Do I still have good flow? Is the money flow cranking in my direction? Well, no, it's not. I've lost all of my money flow here in my center chart, so I've lost that trend synchronicity. That means that the odds are likely that this is not going to reach up to my initial target, and then I need to amend my expectations for this trade. Now, see, this is a really powerful aspect of 3D Apex, which I'm going to talk about a little bit more in a minute. And really what brought me into the fold, so to speak, when I first met Roger and started playing around with this new methodology, seeing if it was for me. Now you can look over here on the 9-minute chart. We're 47 seconds away from a morning star pattern with a doji at the bottom there. That is a confirmed candlestick reversal. That's going to advertise to the rest of the world, along with this pullback pattern over here on the 27-minute, that this market is a buy above the 18 level. So there's going to be a lot of buying orders out there at 19. So let me go ahead and just kind of draw that out so you can see that again rather than having to remember. So the liquidity pool, there's going to be a minor liquidity pool here. All right. So now nothing's changed in the bigger picture. However, my power indicator is telling me very clearly and consistently that this is now a very low probability target. So maybe it's a 40% probability. Well, there's still 40% chance I could get the move up here and get paid. But I'm not really looking for big paydays. I'm looking for consistent, high probability, high accuracy patterns. I only want my money working for me. When things are in a high probability. So, having lost my power here, there's a little more sophisticated thing you can do called a lens shift, which is kind of outside the scope of this training. But basically, you look at the next biggest time frame to see whether the market cycle has shifted. And in this case, I'm actually not getting good confirmation from the next deeper time frame. So that also promotes this exit early scenario. Okay, so this market just closed with a morning star. There's going to be a ton of liquidity up there. It's 19. So I'm going to go ahead and just put my entire order out there at 19. All right, so that'll just sit out there and wait. You should be able to hear the ding as it goes off. Now, let's go back to the 5-point formula. We had a market that people would want to buy. We identified that correctly. We defined an area at which it was cheap, and we bought some. Now we're going to define where it is that people are going to want to buy this market. Well, I thought they were going to want to buy it up here. And the evidence certainly suggested that that would be the case. Now that picture has changed. Think of this like, I don't know, maybe you're a retailer going into Christmas and the weather's going to be particularly bad. So maybe not the best time to spend a lot of money on advertising about your sale. Same concept. So the picture has changed. And the way that I discovered that picture has changed is by objectively measuring the power in the market. So at this point, I have the luxury of just scratching this trade for 1 or 2 pips of profit. But there's still some power over here on the 27-minute, and this is a very valid buy signal. So I know that there's going to be a large there it goes. There's a large majority of people who are going to want to buy the market at 19. And I was first in line. I just got filled. Let me just confirm that I got filled in full. Yes, I did. And so that gets me flat, and I'm just making sure I have no open orders, and this trade is now resolved. So let's go through the formula again. First step, find a market that somebody's going to want to buy. And we used the power indicator and the classic chart resistance and support elements in order to define that. Step two, find an area at which that market is cheap. Again, we used objective methodology through chart support, resistance, moving averages, other traditional forms to find areas where it's likely that buy orders would have lurked. Then we needed to define an area at which somebody would want to buy it from us. Now, obviously, I'm as greedy as any other human being. It would have been great to sell it up here in the 20s and 30s, but that's not what the market offered. That's not where the customer base was. The customer base was above this Morningstar pattern, okay? And I could tell that. Again, this is why we say, you know, why hope and guess when you can know what it is you need to do? Now, I could have guessed that the market would push up higher, and again, it may do so. There's still a small probability that that will occur, but I don't have to guess. I know from my power indicator that this is a trade that's not likely to go much further. So why would I take a winning trade and turn that into a loser because of hope or greed or wishing or any of these other emotions when I have clear scientific knowledge based on the probabilities, the odds, that the highest probability for me to bank my profits would be right there. Okay? So great example of a trade. Most people would call this, you know, a failed trade because I bet you it would come back an hour from now and there's no way the market goes up this high. Instead, it probably comes down, and actually, if it fails this pullback pattern, it may come down and break to new lows, thus producing a stop loss for those without this layer of additional precision and information that the 3D Apex trading methodology offers. And you can see how it's struggling here at 19. And notice too, by offering to a constituency that I knew existed, and again, I know this because of that Morningstar pattern and the traditional way that people are taught to trade, by knowing where that constituency was, I was first in line. So I had no worries on fills. I got filled within the first 10 to 15 seconds as that initial surge of buying kicked in from the trigger point that I just defined for you. And now I'm flat and out and could care less about what happens later. Ready for the next opportunity, whether it's in this market or now I can go off and mine for gold in other markets. All right, so what did this really mean? Let's go back over here. And let's take a look. First of all, let me make sure. Okay, I got no orders. That's good. So I'm back to where we started. So about $2,000 or $200,000 in this account. This trade was worth $1,000. Now notice that I paid commissions a little bit on one, but I'm actually getting commission rebates. That's important. When you trade passively and you offer liquidity to the market, certain brokers actually reward you for that. So I actually made $10 on my commissions. That was not a cost center, but a profit center for me. Huge edge in and of itself. But anyway, realized just about $1,000 on a completely failed trade. Now, was that a monster win? Heck no, but it was a win. My account moved in the proper direction, in the up direction, right? So now next time I take a trade, I can compound that if I choose and take a little bit larger size. So this is kind of interesting. This trade, as you've watched it, live and in real time while I was making my management decisions, it literally took 19 minutes and 50 seconds, including all of the time I spent explaining, to manage this trade. The rest of the time I was doing other things. I was walking around, in my house making breakfast. So I really wasn't focused on these charts. I wasn't stuck here for this, what is this now, probably an hour and a little bit more that this trade took to unfold. And as I speak with you here, check out, notice nothing's happened. At 19 is top tick. I mean, literally top tick. It's struggling here. And again, the odds are probably a lot higher now. We're going to see a failure of that pattern and a push back to the downside. Yep, and there it begins. So actually, this is a good segue because I've talked in a couple other videos about my sort of my transformation when I started trading 3D Apex with a live account. So let me go ahead and bring up that spreadsheet real quick. Now you've probably already seen this before, so I won't go through it in painful detail, but basically here's the equity curve over the first month that I traded 3D Apex. Started out learning just kind of where you are now, kind of struggling to understand how everything fit together and how the components worked. I got some things that didn't really make sense to me. I started to lose a little bit. Once I really got down about $100, I called Roger and said, hey, I'm obviously not getting it here. Let's take a few moments to walk through some of these trades and figure out what it is I'm missing. We found what the issue was and addressed it, and boom, instant reversal of fortune. But what was interesting about that, if I scroll down here, after the turning point, coming back over here, There you go. Okay, so after the turning point, I made 143 trades over a 10-day period because remember, I was trying to prove or disprove something to find out whether I was interested in making it part of my trading program or whether I was just going to service my clients' needs and move on. I had an 80% win rate. And I think before that I only had about a 46% win rate. So night and day difference in accuracy. But look down here. It was a terrible month. There was nothing but failed trades, just like what you've seen here in today's trading. The average risk reward was awful. It was 0.68. So for every $1,000 I risked, I only made $680 in gains. But I made 80% of those trades into winners. Through the process you just saw now. That was a failed trade that we just went through. It wasn't a very good trade after all, but it didn't cost me any money. It actually made me money. And let's figure out what that was. So it was roughly $1,000. 5 by 2009. That's about a little less than half of 1%. Totally acceptable for a failed trade, right? And that's the nature of 3D Apex. Again, 3D Apex is not a magic wand. It's not going to make anything happen, but it's going to allow you to know very clearly and objectively by measuring what is about to happen in terms of odds. So sometimes the odds pictures change. In fact, they're changing all the time. You'd like to have those trades where the odd picture gets stronger, and that really confirms that you should stay in the trade and ride it a lot further. But the majority of the time, that's not the case. You enter in on a cycle that you have hope and optimism for, and the power isn't there. So you take your money, again, very clearly, very objectively. You can see how basically all I did was realize that there wasn't enough power to take me up to the liquidity pool that I really hoped was going to be my final objective. Instead, I realized that I needed to find the next nearest liquidity pool, the next nearest customer base. You really have to see the market as a marketplace, right? What is it? It's a market. It's a market just like any other market, fish market, flower market. Think of all the different marketplaces that exist in the physical world where people bring their goods in from farms, from like the flower markets are a great example. You've got a very perishable product. They're brought in from all over the world, and people who need to buy and sell those flowers for their business come into that centralized point, get their inventory, mark it up, and sell it to their customers. And we're doing the same exact thing when we trade the financial markets. It's just a lot cleaner, simpler. Obviously, you don't have transportation costs, etc. So that's a great example that really reinforces the point of how you can actually make money if you treat trading as a business, even though the market's really not that good. There isn't all that much movement. Maybe it's not really trending that well. As long as you have an objective way to identify where your entries and exits will be optimally placed, there's still a lot of money to be made. $1,000 for an hour's worth of work is not exactly like putting a stick in your eye. Would I have liked it to be 6 to 8, which is sort of what I was expecting? Sure, but there's no reason why I can't now go find another trade in another market, and maybe that market will have more power. And that's something that's really important. It's the concept of money velocity. A lot of people don't really think about this, but if I get in a trade and it's boring and dull and slow, and it doesn't go anywhere, well, that money that I have tied up in that trade is not available for use anywhere else. And there may be another market with more power that is going to pay me a lot more for my time. So not only do we want to find the best odds for our entries, but we also want to stay in the trade as little as possible. We want to have as much of the time as possible in cash. We want to be flat as much as possible so that we have that ability, that agility to switch markets, to find the opportunities as they show up. Also, too, in our current market environment, there's a lot of news risk, and there are a lot of weird things happening in the world. We've got the central banks intervening right and left. So there's also kind of an overwhelming event risk that's in the market. So that's another way to reduce your risk. You're only in the market a short period of time. The chances of something bad happening, during that time when you're involved is pretty low. Obviously, you want to be checking your scheduled news announcements because most of the big market movers are scheduled. And you can know ahead of time when those spikes are likely to hit. But just in terms of random events, the chances of that hitting while you're in the market, if you're only in the market for an hour or two a day or maybe 5 or 6 hours a week, very, very low. So again, another way to really eliminate fear, the fear of getting caught, of getting hurt. Just not very likely if you're trading in an optimal manner. So let's go ahead and wrap up here. If we go back over to the charts, we can see that, look, we've come all the way back down to the lows. So my exit at 19 was literally top tick. And now the market's back down below my break-even point, and I would be showing probably at least $1,000 of loss right now with a market that has negative momentum and looks like it might be going negative over here on the 27-minute. All right, so now let's go into the time machine and look exactly at what happened. I'm done with this video. I was just about to post it, and I looked back at my charts. Boom, what do you see? Here was that setup point. The high tick was 19. I was high tick in that market. Market then fell as forecasted by the failure to follow through in power, the flip of power. Power then turned to the downside, and you can see my stop loss was set under the lows of this section here, my area of operations. That would have been triggered, and that would have been a failure trade and a loss of about $4,000. So really, you can say here with absolute honesty that the 3D Apex trading methodology, and in specifically this power indicator, was worth $5,000 right there on that trade. Because if you took two traders trading the same pattern for all the same reasons, one trader has 3D Apex, the other doesn't. Trader A with 3D Apex makes $1,000. As you just saw, Trader B without 3D Apex loses $4,000. That's a $5,000 spread. So you can see instantly here, in just a matter of 20-30 minutes, the value that this methodology offers, and why it's really worth taking the time and putting in the focused attention it takes in order to understand how all these tools work together. So beautiful trade. Great teaching example. That's actually probably a better teaching example than if it had just blown out to the upside and given an easy profit. So making money when the sun's shining is great and fun, but making money when it's a cloudy day with a chance of rain is a much more important to your longevity and, more importantly, your equity curve as a trader. So if you have questions or comments, go ahead and leave them below. I'd be happy to answer as many of those as I can personally. We'll look forward to speaking with you again in another video. As always, thanks for listening. My name's Bo Yoder. Good luck and good trading.